Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that sellers were active at the 81 to 83 resistance zone, and that's the area that ended up capping the upside overnight. And on the downside, we have the overnight low at 74.5. We're seeing a little bit more selling coming into NQ, but ES so far has been holding up quite well. So heading into this morning, we have initial support at 68.5 to 70.5. So in the event of a break below 74.5, that's the area where buyers can be active. That would essentially be a test of the breakout that we saw yesterday afternoon. And on the upside, we have pre-market resistance 80 to 82. Now that's a zone that has been tested a couple of times in the overnight session, so we just have to be a bit cautious there. And in the event of an upside break above the overnight high, we have initial resistance 86 to 88. So heading into the FOMC announcement, which is the primary catalyst on the day time frame today, the market could remain very balanced, either within initial support and pre-market resistance, or definitely initial support and initial resistance. That would be quite a wide range actually heading into FOMC. Typically, we see the market balance in a pretty tight range heading into the announcement, and then once we actually get the FOMC announcement, at that point, it is a bit of a wild card in the sense that the market can quite easily react and make a move to 10, 15 points higher or 10, 15 points lower, and it is pretty erratic and difficult to trade right on the announcement. So usually, it's a good idea to wait it out and let the first 5-10 minute craziness happen right after FOMC, and then try to identify kind of where the market's trading. Is it stabilizing at support, or has it already hit a major resistance point and now can it just bounce in a range? So those are things that really need to be assessed once the announcement is out of the way, and we can gauge that based on where ES is trading. For example, if we break out to the upside and we're trading above 80 to 82, that would tell us that overall buy side is still in control and we can hit higher. And in the event of an upside move, the primary target on the upside for ES is 91 to 93. And that's really the next key inflection point as far as upside resistance goes. So 91 to 93 is key resistance on the upside. And if we take that out, at that point, bigger picture, ES could be setting up for a move back up towards the all-time high and potentially beyond. But on the day time frame, the resistance zones above can still attract sellers. So 91 to 93 is key resistance even after FOMC. A breakout through 91 to 93 would tell us that there's some major strength in this market. We could be setting up for a test of 2014 half. But along the way, the 99, the 02 half to 0375 could still attract sellers, and we can kind of take a little bit of time to get to the 2014 half area. In the event of a downside reaction, we have to keep in mind that the way that this market has made this up move, if you look at a daily chart, it looks like it's in a straight line, but if you zoom in a bit, you can see that the market actually went up in a pretty orderly fashion. There were pretty defined balance areas along the way. There was consolidation, there were pullbacks, and considering how the market went up, there is some pretty decent support built up, these pockets of support at these lower areas now. So in the event of a downside reaction, we can still expect bounces and reactions at the support zones. So even if we're going to make a bigger move lower, I think that we will see, reactions at the support zones as we head lower. And, at this point, in the event of a downside move and a break, below 68.5 to 70.5, we have a pretty key high volume node at 64. So that area can attract buyers first test. 61 quarter, 63 quarter is pretty key support from yesterday. And again, if we head there in a straight line, that's an area that can attract buyers and result in a bounce back up towards 68.5 to 70.5, potentially higher. In the event of a break below 61 quarter, we have an open gap 59.75, and there's a high volume node there as well. But then the next support idea is 55 to 56.75. That's the next important inflection point, and then we have 48 quarter to 50 quarter as the next main inflection point below that. So, as we head lower, even if we're going to get a downside reaction, again, I think we can get, bounces at pretty much every support zone along the way, with, the market eventually getting a bit too stretched and the selling shutting off, perhaps, down near 55 to 56.75 or 48 quarter to 50 quarter. So, overall, we know that the buyers are in control, and if we're holding above 68.5 to 70.5, which is yesterday's breakout, then we definitely want to give more preference to long setups rather than short setups. Based on the way this market is setting up right now, it does seem like it's setting up for a upside move and a test of 91 to 93. So that's going to be the primary scenario that we focus on. But again, on FOMC, it really is a wild card, and it can go 15 points up or down, and a lot of times it can do actually both. So just have to be very careful and selective on the trade steps we take once FOMC is out of the way. Heading into FOMC, any move outside of the overnight range is a pretty good fade setup, especially on the long side. So if we break 74.5, 68.5 to 70.5 is a potential long. If we break out above 80 to 82, 86 to 88 is a potential short ahead of FOMC. And then we want to be flat heading into the announcement. And then once the announcement's out of the way, then we just have to gauge, where the market is trading in relation to yesterday's range, some of these key support and resistance zones. So those are the main ideas heading into the open. Let's see how well the buy side holds it up today, and we'll take it from there.